It's Tuesday, October 11, 2022. Well, the markets were up earlier. Markets across the board are now in the red, except the Dow Jones. Dow Jones earlier this morning was up nearly 400 points. As I make this video right now, it's only up 73. The 10-year bond yield last night broke 4% again. They pulled it way down today. It was sitting at about 3.89. Now, with about an hour left of trading, it's up sitting at about 3.925. So we are no doubt in the land of confusion right now. There's a lot happening. There's a lot of hope out there. There's expectation to the CPI and the core inflation number coming out this Thursday. Bank of England expands bond market intervention in effort to quell volatility. This is the second expansion. Bank of England announced on Tuesday an expansion of its emerging bond buying operation as it looks to restore order to the country's chaotic bond market. So this, I believe, gave hope to the markets today that we're going to see the Fed jumping in, buying back into these markets. And who knows, maybe they are still continuing to buy bonds. When you see the 10-year bond yield last night at 4% and then wake up today and see it down 10 or 12 basis points, it has to make you question, how did that happen? Who's buying this debt? Here's one from the hedge. This one came out yesterday. Paul Tudor Jones fears stability of society as inflation soars. The infamous trader Paul Tudor believes the U.S. economy is either near or already in the middle of a recession. He says, "I don't know if it started now or 2 months ago." I don't understand how people don't get that we are deep into this recession right now, arguably now in a depression. He goes on to say, if they don't keep going, then we're going to have high and permanent inflation. The Fed, I truly believe, as much as this is going to hurt the economy, as much as it's going to hurt people, the real pain, the real hurt came from 0% interest rates, keeping rates too low for too long, and printing trillions of dollars. That's where the pain and suffering really came from. Now, the remedy is going to be more pain and suffering in terms of higher interest rates for a longer period of time. By 2024, we are going to have debt dynamics, he says, that are so dire, we will have fiscal retrenchment. So the outlook, the future does not look good for this economy, ladies and gentlemen. And when you listen to somebody like Paul Tudor, you listen to a Rob Kiyosaki, you listen to a Jim Rogers, you listen to a Ray Dalio, a Jim Rickards, a Bill Holter, a Peter Schiff, you name it. There's so many people out there, and they're smart. They're very smart. And they're warning you that this is just the beginning. It's going to get much worse. And people believe that this is as bad as it's going to get. You ain't seen nothing yet, ladies and gentlemen. Just connect the dots here. It does not take a rocket scientist to figure out that the trend today is forecasting danger tomorrow, and that this thing is going to get out of control, that this recession is clearly going to turn into a depression. And if you're not prepared for it, you are going to be completely wiped out financially. The things that we're going to see break out socially are going to be extremely dangerous. You need to prepare. The Fed's Lael Brainerd warns higher interest rates will further slow U.S. economy. Interest rates will need to remain elevated for some time, she says. There's no stopping these rates, ladies and gentlemen. We're going to get another rate hike in November, another one in December. You can hope it goes away. You can hope that it stops. There's no stopping. No matter how much you hope, the rate hikes are coming. The economic downturn is going to continue. It is going to accelerate. Unfortunately, we're going to see a lot of small businesses perish. We're going to see a lot of, I think, larger businesses go under also, because the cost now to borrow money, they're just not going to be able to afford to remain in business. So we're going to see big trouble. Dow Jones now down 30 points, up nearly 400 400 points just about an hour and a half ago. Now down 30 points. Markets across the board in the red. How it finishes, I have no idea. This video will be up by then. So I don't know. But right now, they are not going to get a 400-point day on the Dow. The hope is fading. And I think that there's going to be a lot of waiting for Thursday when we get the CPI. What do you think? Is inflation going to be higher? Will it come down a bit? Will it just remain the same? A lot of people saying that it could possibly be going up. I don't know. I don't have a crystal ball. I don't like making predictions. But we do know that if it does come down, it's not really going to be enough to where people really feel any ease. That they're still gonna be under a lot of pressure with inflation. So if we're at 8.3 and it comes down to 8.1, 8.0, people just aren't going to feel any relief. This thing, ladies and gentlemen, as I'm watching it unfold today, it's, again, the land of confusion. We have people coming on, these analysts, these economists, these cheerleaders telling us that, you know, you just need to keep buying. You need to keep buying. You need to keep buying real estate, buying stocks. Yet every time they say this, it just keeps going down and down and down and down. Be very, very careful here listening to theeconomiccollapse.com. Even the banksters are being forced to admit that the U.S. economy is really starting to come apart at the seams. I think that if you're not awake right now, it is time for you to wake up. The Fed is not going to end the madness. The Fed is not your friend. Things are going to get really, really bad across the globe. We have over $300 trillion of global debt. The U.S. has broken $31 trillion of federal debt, not including unfunded liabilities, sits where we would sit at about $170 trillion. Bank of America now predicting that the U.S. economy will lose 175,000 jobs per month in 2023. I think that we're going to lose a lot more than 175,000 jobs a month next year. Jamie Dimon, things are very, very serious, he says. Things are going to get a whole lot worse. Kathy Wood, ARK Innovation. Fed has the potential to create a deflationary bust. Now, of course, she would like to see the Fed pivot. She looked like a genius back in the day. A lot of people look like geniuses. You look at the real estate market. How many realtors looked like geniuses, very successful, but they were just order takers. Now we're going to see what people are made of as there's no more freebies, as things are not being propped up, as trillions of dollars are not being pumped into the economy, as we're going to see the balance sheet, the Fed balance sheet continue to tighten. We're going to see rates continue to go up. And so now you can't be an order taker in today's world, in this economy. You're going to have to know what you're doing. You're going to have to be very tactful, very strategic, and very awake and aware of what's taking place. Easy to take orders and write those orders up to sell a house or to be a Kathy Wood. And you could literally buy anything in the stock market and it was going up. You could buy any crypto, it was going up. Not any longer today. Now you better know what's going on. And that's why, look, don't rely on your financial planner. Don't rely on people on the television. You need to start doing your own homework. You need to be critically thinking for yourself. You need to start learning what's going on. You need to start following what's happening in this economy because it is going to affect you, your wealth, your future, your retirement, your kids, everything. And don't rely on other people to manage your money. You need to be very involved in managing your own money and knowing exactly what's happening. These people, these financial planners and managers, they want you in the system. They get paid. The minute you get out of the system, the minute you're buying gold or silver, they're not making money. And so they hate gold, they hate silver, they hate you just sitting in cash and being out of the market because they don't make any money. So be your own financial planner, just like you're being your own central bank. It's okay to reach out to people that may know more than you in regards to the markets. But at the end of the day, you need to start taking responsibility for your own money. These financial planners and managers, They lost a lot of people money back in 2008, and they're going to lose a lot of people money this time. Many of these money managers and financial planners are in their 30s. They did not really go through 2008. They don't understand a downturn. They don't understand what a collapse is. They don't understand the possibility and potential of a collapse. You do. So you need to really be involved in managing your own money. Another article today from The Hedge. Big rail workers union rejects the administration's backed labor deal, renews strike possibility. No mention of this at all today on the television. They're back to the bargaining table, resetting the countdown to a potential work stoppage. How does this not affect the markets today when we're talking about a railroad strike? I don't understand it. And it's amazing how much we do not hear on these financial channels and how much of the reality they ignore, yet they're cheerleading for all of us. Every guest literally talking about how you need to be buying into these markets right now. What an opportunity. Never talking about the risk of these markets going down another 40, 50, 60, 70%. Here's another one. This one comes from CNBC. It's bad enough mortgage rates are over 7%. Now it's harder to qualify for a home loan. Credit availability is the lowest it's been in over 9 years. Lenders are concerned a weaker economy can lend to a rise in mortgage delinquencies. Foreclosures rose 15% from July to August. They're still very, very low. But this can flip in a second, ladies and gentlemen. Fox Business had a guest on earlier this morning, I believe a real estate broker or agent in the luxury market, the $1 million market. And she said, well, I'm really happy you have me on here today because I can clear things up and tell you that, basically things are okay. It's not going to be as bad as 2008. The consumer today or the buyer is stronger. So again, it's not like 2008. And she was very happy to share with all of us and to explain everything to us that it's just not going to be that bad. But yet she didn't talk about the record debt today compared to '08. She didn't talk about the record dependency of credit card use today. She didn't talk about the destruction of tech, the major layoffs. She didn't talk about that. She didn't talk about people living paycheck to paycheck. She didn't talk about mortgage rates breaking 7%. But I mean, that probably doesn't really matter to her because she's in the luxury market of $1 million and above, where most of these people are paying cash anyways. But she just didn't explain the danger out there. Again, we have, I think the debt was about 10 trillion in '08. Now we're at 31 trillion. We were lowering rates back then. Today we're raising rates heading into a depression. We have the highest inflation in history, not 42 or 44 year highs. This is record inflation. If you use real inflation, we're at about 20%. She didn't talk about that, what that's doing to the average home buyer, the average consumer. The mass layoffs that we're seeing, even though unemployment's 3.5%. Dow Jones now down 74. She didn't talk about the stock market and what the markets are doing, the volatility that is taking place. Just everything's going to be okay because it won't be as bad as 2008. We need this. We just need a little correction. These are all the same gimmicks that they told us back before the 2008 crash. I just love when they put these people out here to cheerlead and just to calm everything down and just tell us everything's going to be okay when you know it's not. This is why they put these people on the television, okay? They're trying to calm you down because they know that this thing is about to break apart. I mean, take a look at how much longer homes are staying on the market. Most sellers have now had to adjust their listing price in order to sell. Mortgage apps down at record levels, refis down record levels. I mean, it goes on and on and on. Why we're going to see a massive housing crash. I believe it's going to be worse than 2008 based on the economic damage that is being done right now and the wave of layoffs we're going to see. No doubt this is going to be a massive, massive housing crash. I was reading an article today. Local bakeries' post on inflation is jarring and shows how much trouble we are in. Now, you take into account how much food costs when you go to the grocery store, you go out to lunch or dinner, but 13 million Americans needed to seek help a couple months ago. According to this article, back in September, we had an additional 13 million Americans seeking help, needing food, compared to the amount before the health crisis. So just think a month ago, 13 million people in the food lines. When you think about, 42 million people who are on food stamps, and they all get these plastic cards, but think if you had to see 42 million people waiting in line to get food. And on top of that, another 13 million people here in the month of September seeking help. These are people that have cars, who may still have jobs, who are just falling behind. But according to this bakery in this article, and I'll go through some of the price increases. Now it goes from January 21st to January 22 to July of 22. Flour, January 21st. This bakery was paying $12.19. Now I don't know if that's, a pound, 5 pounds. I know nothing about the baking industry, but I'm going to just give you the numbers here. January 21st, $12.19. In January 2022, they were paying $19.97. July of 2022, they were paying $28.88. For powdered sugar, January 21st, they were paying $25.65. January 22, they were paying $26.32. And in July of 2022, they were paying $34.59. AP shortening, $41.40. Then it went to $71.24. Then it went to $87.39. Donut fry shortening. Back in January 2021, they paid $42.34. January 2022, $60.25. Then it went to $88.05. Eggs. January 2021, $40.92. Then January 22, $47.30. July 22, $92.02 for eggs. Salt, $10.47 to $13.38 to $14.64. Rainbow sprinkles, $56.41 January 2021. January 2022, those sprinkles went to $80.53. July 2022, $86.94. How long can your little local bakery hang on? How long can your local restaurant hang on? Borrow time. They're on borrow time, ladies and gentlemen. And the price of everything is going through the roof. And unfortunately, anytime I go out to get something to eat, the quality of the product, of the food, of the lunch, of the dinner just continues to go down. I am trying to eat at home as much as I can, to shop for the best quality food that I can. But as many of you, when you're out and you just have no choice and you have to grab something to eat for lunch or dinner, you are noticing that you are paying a lot more, you're getting less. The quality of the food, no doubt, is going down. They are having to make sacrifices with portions, with quality, with service, and it's really, really sad. But you come to a point where you just go, it's just not worth going out to eat because you're just paying this exuberant amount of money and just getting poor service, poor quality of food, small portions. And this is going to end very, very bad for the restaurant industry. Now, there are places, no doubt, that are keeping it real. They're still giving the same portions, the same quality. Prices have gone up. And look, I don't mind if I have to pay more. At least give me the same portions and give me the same quality. The thing I hate the most is when you start cutting quality. That's when I quit going to that restaurant. Americans' inflation expectations dropped again in September. New York Fed says. This was on Fox Business. More hope. How many of you expect to see less inflation next year? Now it says here, most see inflation at 5.4% 1 year from now. 5.4%. Most people are not going to be able to survive with 5.4% inflation. How many of you believe this number? I don't. I believe that it could go much, much higher. At least real inflation will. But they can tell you. Now they can just throw out these numbers, throw out these stats and just tell you it's down when it's not. They can tell you gas is down, but you know it's not because when you go to the gas station, you know you're paying more. They can tell you that the cost of food is going down on the television, but when you go to the grocery store, you're paying more. So you know it's not going down. But it's just, if they say it, then the markets believe it, and the markets need any type of hope they can get right now, and this is just more hope. How many of you, comment down below, how many of you believe that we will have less inflation next year? We're not going to have less inflation next year unless this Fed gets ultra aggressive. And remember, 0.5%, 75 basis points, not going to do anything when real inflation is around 20%. We now need to see the Fed start raising rates at 2%. I truly believe that that's what it would take right now in order to start putting a dent, in order to start fighting inflation. You got to see rates hitting 2%. Is it going to crush the economy? Yes. But if you don't do it, what's hyperinflation going to do to the economy? It will crush the dollar. It will crush the economy. It will crush the future of this country, the standard of living. Look, we are in a very, very bad place, a very, very bad situation. There's no easy way out. But if you want hyperinflation, if you want the Fed to pivot, if you want to go back to resorting back to printing money and lowering rates, the same thing that got us in to where we're at right now, printing money and low rates got us into this inflationary time. And now people, especially the people losing money in the markets, the Cathie Woods, they want to see a pivot because they don't like feeling the pain. They liked it when they got free money. But they would be the first people to sell every stock that they have and get out and leave you hanging. There is no easy way out, but I truly believe that if we choose to pivot and go back to what started this mess, we're going to get exactly what we deserve, and it is going to be extremely, extremely painful. It might be great for the stock market for a short while, but it is going to absolutely destroy this country, destroy this economy, destroy your standard of living, destroy your future, destroy your purchasing power. Could you imagine, if you think inflation is bad right now, imagine if they reverse course, what it would do. Now, I'm fine with it. I have a lot of gold. I have a lot of silver. So I would have a lot of purchasing power. But I would rather not go there. That's like hitting a nuclear button, in my opinion. Rather not go that route. We would see gold and silver go through the roof. I would rather have gold and silver remain where they're at and just continue raising rates aggressively, more aggressively, and deal with the ramifications that way than to pick hyperinflation. The hedge, Americans continue to pay for inflation with credit cards. Americans are burning up their plastic in order to make ends meet, in order to keep their heads above water, in order to pay for the essentials. People paying their utility bills, they're paying rent, they're paying their groceries on credit cards. Average APR, 18.45%. A month ago, it was 18.03%. People are keeping higher credit card balances for longer. They're going to have a very, very difficult time paying these balances off as the rates continue to go up and the prices of everything that they're using those credit cards for going up. 60% of credit card debtors say they have been in credit card debt for at least a year. Now, the people on the television will tell you that this is good. That this is a good sign because people out there spending, they borrow more during the good times. In bad times, they don't borrow as much. Jerome Powell told us months ago that the average household is in very, very good shape. Dow Jones just went green, up 12 points. This is the garbage that they tell us that, oh yeah, when the economy is booming, everybody's taking on debt. Everybody's using their credit card and they're carrying balances, bigger balances for longer periods of time. Interesting. I would think that in a booming economy, people are paying those credit card balances off immediately, that they're not running balances as high as they are now, that they're not paying for essentials, they're not paying rent, they're not paying utility bills with credit cards in good times. In good times, people have money saved. They have money in their bank. People have cash on hand. But they're telling us in good times this is normal, that people are running up their credit card balances. You know, I'm alarmed at the pace of growth in consumer credit. We are seeing record levels. We all know why people are using credit cards, and that's because they have to. They have no choice. And they are just piling up debt. And this is what's so dangerous about this next global collapse, this next depression 2.0, is people have so much debt. Going into a recession, a depression with massive amounts of debt is going to guarantee that you do not survive it. This guarantees that you are going to get wiped out. You're going to lose your car. You're going to lose your house. You're going to be evicted. You're going to have to sell things. You're going to have to make some huge life-altering choices very, very soon, because you are not prepared to deal with the wrath of this collapse. 32% of Americans have paid a bill late in the past 6 months. Wow, that sounds like a really strong economy. It sounds like the consumer is very strong. 20 million households cannot pay their utility bills. 20 million households cannot pay their utility bill. When was the last time in American history you ever heard that? 61% said it was because they didn't have the money to cover the bill. That's why 32% of Americans paid a bill late. I think that most of these people paid the bill late because they didn't have the money. But it says only 61% didn't pay it because they didn't have the money to cover it. The average person has no choice but to pull out the plastic in order to survive now. And how long will they be able to survive? Peter Schiff said this is not sustainable. A credit card has this inconvenient thing called a limit. That's what Peter had to say. And what happens when you hit the limit? How do you pay the utility bill? How are you going to pay your rent? How are you going to put gas in the car? We are heading into the unknown here. U.S. consumers are buried in debt, more than $16 trillion of debt when you include mortgages. And those people who think that they're wealthy because the price of their home has gone up, they're going to be in for a rude awakening very, very soon, as we begin to see equity evaporate out of the housing market. And it has begun, ladies and gentlemen. But stocks up today on the expectation of falling inflation, what the Bank of England is doing, buying up more bonds. So it's more hopeism. And these markets need any type of hope now in order to go up. The Fed is not holding the market's hand. They're not passing out the addictive drugs to the markets now. And without the Fed, these markets are going to be in big, big trouble. So they're relying on any type of hope to go green, to go up. And if we get bad inflation numbers on Thursday, there's no telling how far these markets can drop. But the question is, will the numbers be accurate? Are any of the numbers we're getting now accurate? Probably not. Probably not. Be very careful what you believe now. But you can believe your eyes and your ears when you go out and you go shopping and you're paying for your groceries, paying for your gas. Every time you write out that rent check or that mortgage check, the health insurance check, the cell phone, the cable bill, the credit card, 18.45% average APR now on a credit card. If you need to borrow money to buy a car, look how much now it's going to cost to finance that car. You take out a personal loan. The cost to borrow money continuing to go up. The cost to live day to day going up. Please feel free to comment down below. I'm going to leave it there today. I know I'm ranting. We'll see how the markets finish up. Dow Jones back in the green. We have about 35 minutes, so we'll see how it finishes up. But stay awake, ladies and gentlemen. Stay awake. This will be a very interesting week, especially Thursday when the CPI comes out. We'll see what we're dealing with. But the way I see it, this economy and the direction we are heading in is about to get much, much worse.